Hello everybody, SPYderCrusher here, and this is a video about the tick intraday today. I frequently comment and mention this indicator. It's one of my favorite indicators out of all of them. It's a really great view into what not ETFs, excuse me, high frequency trading and institutional activity is doing. I've explained why that is, so I won't do that in this video. I'm just going to talk about what it's looking at today. So the bars in the background are the S&P 500, and the purple line and the blue line are both moving averages of the actual tick. The tick itself, the raw value, is hidden. I like these moving averages because they smooth the data. And then these red and then green bands are the upper and lower boundaries. So what I like to do is when both moving averages are above the tick zero line, which is, right at the neutral point, then I like to fade. Or if I'm not making a specific trade, then that's how I mentally position myself, so when I have a trade lined up, I can execute it at the best price. So supposing I'm looking at some oversold plays, I'm thinking a bounce, and so on and so forth, the best place to execute that trade, according to this methodology, would be right here, because you can see that the blue line is below the zero line, while at the same time the pink line is near the outer perimeter of the green line. So that's how you look at this. You want to fade a double extreme, as I call it, to get the blue moving average, which is 20 periods, well above the zero, and then to have the shorter pink moving average pierce or come very close to the outer band on either side. That's my fade clue. So this would be a get long type of fade. This would be a get shorter or take profits type of fade. And the reason why I don't use this as a rote methodology, as in buy, sell, buy, sell, buy, sell, is because there's always a context to the day. Is it trending? Is it range bound? What's the backdrop of the market? Right now we've had a lot of weeks lower, so it makes sense that a bounce could be more likely. However, that's not really the inference here. This is, we already have a trade, we already want to execute it. When and how can I execute it? So here's an idea for a setup. We know that we're in this downtrend, and in downtrends, mean reversion tends to work better. It's more pronounced than in a bullish market, where you can have these trends that last for longer without seemingly getting too overbought. So if your assertion is that we've had 3 days up in a row and it makes sense that we have some mean reversion tomorrow, then you might want to throw on a short index call. This is all hypothetical. If you were going to make that short index call, you have to ask yourself, what is the best possible time in the day to execute it? Because there's a world of possibilities, and there's so many different trades that can occur between now and the close, and you're not trying to top tick, but at the same time you want a reliable measure of how can I get the best price for my trade. So jumping back to the tick, you're saying, okay, I want to execute this trade. Well, the best possible times to execute the trade, according to the tick, would have been somewhere right here, which was basically the top, somewhere right here, which was basically the top, possibly right here, which was pretty good, or on this spike and this spike. So you can see that we're creating a framework for decision making, all things being equal. By following the tick and fading it at its extremes, we got a slightly better position for our trade decision. So I want to reiterate, you don't look at the high tick right here and go, oh, I am going to short. You've already decided to short, you've already found your setups, or go long, whatever, and you use this to accompany your decision as how can I do a little better. Because I promise you, if you decided to get long right here, where it was extreme, actually the blue line isn't agreeing, but let's say right here, you're trying to get long based on our tick rules, you will save pennies on your execution that add up over time. So whether you are going long, going short, I absolutely recommend you use this indicator to improve your executions. I frequently do. In fact, the only reason why I wouldn't is just it's not available. But yeah, I hope this quick video reminds you that about the indicator and how to use it and its pros.